Financial accounting. Now let us understand its functions, importance, advantages, and as well as its limitations. Let us start with importance. The knowledge of accounting is important as it is applicable for any job opportunities. For example, in a firm from secretary to executive, everyone makes use of accounting information in order to analyze the financial position of the firm. So, hence, we can say that it is universality, which is applicable in all industries and roles from employee to entrepreneur. Here, the employee means the person who is working in the firm or for the firm, and the entrepreneur is the person who owns the company or who has started that company. Next, in present scenario, business world is going on exploring and practicing new financial laws. And it is quite necessary for every worker of all businesses to hold at least basic knowledge of accounting. For analyzing or for interpreting the data, it is important that each one of the person of the company should know and should be able to understand the financial statements. Hence, it is relevance because it is essential to understand the changes in tax rules, financial laws, and compliance. Next, companies who make use of effective accounting practices enjoy competitive advantage over their competitors and also make good decisions. Now, what is competitive advantage? It means that the company is having some kind of different or unique idea, or it is able to make out some difference from the same kind of a products in that particular market. So that becomes the competitive advantage of that company. Financial accounting helps companies to have that study and improve their competitive advantage. Hence, it is advantage and gives the business edge through better financial control. Next, accounting is useful in ascertaining the present and future economic stability of the organization. It helps to track financial health and long term sustainability. By having financial accounting, we can estimate and also to some extent avoid risks, which will in return help us to have the stability. Next, insight provides useful financial reports for smart decision. Financial managers depend upon their accounts for gathering information, which is essential for identifying the profitability and financial status of the firm. Next is monitoring, tracks income, expenses, and cash flow efficiently. Accounting involves cash flow statements, which is an effective tool, which means it is useful in monitoring and analyzing the factors which affect the cash flows of the firm. Next, we have decision making. Accounting is also useful in making effective decisions related to cash utilization, efficient business activities, allocation of funds, and financing of investments. Hence, it helps in making better decisions for the company's growth. And it supports strategic choices based on financial data. Personal finance. Now, putting aside of the business point of view, financial accounting also helps individuals in managing their finance. Accounting is not only useful to business firms but also to common people in their day to day life for evaluating the interest rates and to make efficient investments. Now, if you want to have better financial support, then you should be knowing financial accounts or at least basic finance to manage your finance properly and to invest properly and to get your gains. These are the important points of the financial accounting. And you can see, and it is clear from the above points, that accounting is not only important for business people but also for households. Even though accounting skills may not be that important in present scenario, but it would be of utmost importance in the future. Next, let us understand the functions or scope of financial accounting. Now, according to the American Institute of Certified Public Accountant, which is AICPA 1941, accounting is an art of recording, classifying, and summarizing in significant manner and in terms of money transactions and events which are in part, at least of financial character, and interpreting the results. Now, in the functions, it starts with recording. Recording is the primary function of accounting, and it mainly deals with recording of all the financial transactions of business in a sequence order in a book called journal. Next, we have classifying. Classifying deals with the organized analysis of recorded data with an intention to group all the related entries at one place. Ledger account is the book wherein all the similar entries are recorded and it contains different accounts on different pages. Accordingly, related entries are recorded under one particular account. Summarizing includes presenting the classified data in an acceptable and practical manner which is useful to both internal and external users of accounting statements. The process of summarizing involves preparation of trial balance, income statement, and the balance sheet. Moving on, we have associated with financial transactions. In accounting, only those transactions are recorded which are financial in nature and are in terms of money. Transactions which are not expressed in terms of money and are non financial in nature are not recorded in the books of accounts. Then comes analyzing and interpreting. Analyzing and interpreting function indicates that the financial data which was recorded earlier is now being analyzed and interpreted. Therefore, it can be effectively used by the end users in making various decisions related to the financial condition and profitability of the business. After all this comes communicating. When accounting information is thoroughly analyzed and interpreted, it is must that it is communicated in an effective manner to the owner of the business. The accounting information can be communicated by preparing and distributing the accounting reports, which include the income statement and the balance sheet, along with some additional information in the form of ratios, graphs, funds flow statement, etc. Now, with this, we complete functions and scope. Let us now continue with limitations. Limitations of financial accounting. Sometimes a business may incur great expenditure which may not be beneficial in present but may generate benefits in future. Financial accounting fails to provide such information. Financial accounting does not explain the importance of accounting figures. It just shows the records and interpret results. As financial accounting records all transactions on historical basis, it presents a post-mortem of recorded transactions. But nowadays, management is using estimates and projection for making decision making instead of historical facts. Financial accounting takes into consideration only the monetary transactions which can be expressed in terms of money and ignores the qualitative elements. Company comprises of different executives and they are classified under three levels of management, which is top, middle and lower management. Each level of management requires different type of information. But financial accounting does not possess a built-in system which can provide information to all levels of management. Advantages of financial accounting. Documentation. Accounting maintains an organized documentation of large number of monetary transactions that take place in a business organizations, which ensures records are well maintained and accessible. Profitability. It facilitates in determining the net profit or net loss by maintaining records of all the transactions relating to expenses, losses, incomes, and gains. Evaluating. It also helps the firm in finding out the actual criteria besides ascertaining the net profit or net loss. Comparison. The records are useful in comparing the results of business every year and carries out analysis of the development of the business for a particular period of time. Accuracy. These records helps in determining the exact and authentic financial position of the business organization. Detection. These records facilitate in identifying and recognizing the frauds which occurred in the business organization. Then monitoring. These records helps a business firm to monitor its operations. Therefore, accounting records are considered as the eyes and ears of the business. Now, these are the functions, limitations, advantages, and also the importance of financial accounting.